All right, let's jump into a deep dive into Decker's brands, where we'll uncover how they're blending comfy with performance.
Sounds exciting.
We're going to break down their latest earnings call and really dig into the strategies behind two of their powerhouse brands, HOKA and UGG.
Those are some big names in the footwear world. Where are we getting all this juicy information?
Our main source is the transcript from the Decker's Brands Q2 2025 earnings conference call.
Ah, fresh from the source. When did this happen?
It took place on October 24th, 2024. Get ready for some serious insights because HOKA just hit a major milestone. UGG is attracting a whole new generation of fans, and there are even hints of some exciting product launches on the horizon.
You've definitely piqued my curiosity. Let's start with HOKA then. What's this milestone they hit?
Brace yourself. HOKA just surpassed $2 billion in revenue over the past 12 months.
Wow, $2 billion. That's not just good. That's dominating the running shoe market. What's the secret sauce behind this success?
Well, they've tapped into something big. A growing consumer desire for both comfort and high-performance footwear.
It's not just a fad, is it?
Definitely not. It's a fundamental shift in how people are thinking about their shoes, valuing quality and innovation.
Makes sense. People are willing to invest in products that really deliver, and it seems HOK is doing just that. But they're not just a running shoe company anymore, are they?
Exactly. And that strategic expansion into multiple categories beyond just road running has played a key role in their growth.
So what else are they conquering besides the pavement?
Well, they're still winning in road running, no doubt, with their popular models like the Clifton and Bondi.
Those are classic.
And they're also introducing exciting new entries like the Skyflow, which had a very exclusive launch with specialty retailers.
Ah, playing the exclusivity card. I bet that created quite a buzz.
It definitely did. But they're not stopping there. They're also dominating the trail running scene.
Speaking of trails, I heard something about the Tecton X3 having a pretty cool backstory.
You heard right. The Tecton X3 is actually based on the prototype worn by the last two champions of the UTMB race.
UTMB, isn't that an insanely challenging ultramarathon through the Alps?
It is a grueling 106 miles. And this year, HOKA athlete Vincent Bouillard won wearing the Tecton X3.
So they're conquering roads and trails. What about their global footprint? Are they just a U.S. phenomenon?
Definitely not. Their international revenue is actually growing even faster than in the U.S.
Wow, so they're going global in a big way. How are they tackling that expansion?
They're strategically building brand awareness in markets where they're still relatively unknown, focusing on building communities around their retail locations in major cities like Paris, London, Tokyo, and Shanghai.
Smart move, creating those local connections.
And they're making their presence known at key running events across Asia. Plus, they're diversifying their distribution channels by partnering with retailers like Shoe Palace and JV.
So HOKA is firing on all cylinders, but what about UGG? They've been a household name for years, but how are they adapting to today's ever-changing market?
Well, UGG is also seeing strong performance. Their first half results show a 13% revenue growth.
That's impressive. What's fueling that growth?
They've been really smart about evolving their iconic product lines to resonate with modern consumers while keeping that core UGG DNA of comfort and quality.
So they're keeping up with the times without losing what makes them UGG.
Exactly. Their classic Tasman and Ultra Mini styles are still incredibly popular, but they're keeping things fresh with new colors and collaborations. Plus, they've successfully built excitement around some newer collections, like Golden and Lomel.
And how are those newer collections doing?
They're actually attracting a younger demographic and have become some of their top-selling styles.
So they're appealing to a new generation, which is key for any brand's longevity. But it's not just about product, is it? What else is UGG doing to expand their reach?
They're making a big push to attract more male customers, blending UGG comfort with a more masculine style.
That's an interesting move. How are they approaching that?
Well, their partnership with Post Malone is a great example. They're leveraging his massive following and influence to really embody that blend of comfort and style.
Post Malone, that's a savvy choice. He definitely has that cool, comfortable vibe. What about their international performance?
UGG is seeing strong international growth, especially in Europe. Their first half revenue there has nearly doubled compared to 2 years ago.
That's phenomenal. What about the U.S. market?
The U.S. is also performing well, particularly with those younger consumers we were talking about earlier. They've really nailed their marketing and branding to resonate with different demographics.
So both HOKA and UGG are thriving. But what about the brains behind these brands, the parent company, Deckers? What's their overall business model like?
Let's delve into how Deckers is strategically navigating this complex retail world.
Sounds like we're about to get into the nitty-gritty of their business strategy. I'm ready. Deckers has a really balanced approach, between their direct-to-consumer sales and their wholesale channels.
A two-pronged approach. Interesting. And how are both those channels performing?
Both are doing incredibly well. They both saw over 20% growth in the first half of the year, which shows they've found a really healthy balance.
That's impressive growth across both channels. But with the economic headwinds everyone's talking about, how is Deckers navigating things like inventory management?
That's a great question. They're very carefully managing their inventory, making sure they're not overproducing and ending up with a surplus.
So no massive clearance sales.
Not if they can help it. They're using what's called a pull model, which is all about making sure there's a healthy demand for their products.
The pull model. I've heard that term before, but could you break it down for our listeners?
Of course. Basically, it means they don't flood the market with tons of products hoping they'll sell. Instead, they focus on generating that demand first and then producing accordingly.
So it's all about strategic production and creating a sense of scarcity, like a limited edition release of a sneaker.
Exactly. Think of it like a chef who creates a special dish with limited availability. The scarcity makes it even more desirable.
Makes sense. It's a smart strategy, especially in the footwear industry, where trends change so quickly.
Absolutely. It minimizes waste for the company, which is always a good thing, and it also allows them to be much more responsive to those changing consumer preferences because they're constantly keeping an eye on what's selling and adjusting accordingly.
It sounds like a win-win. Deckers benefits from reduced waste and stronger profit margins, and consumers get a product that's in high demand. But even with this smart strategy, what about the challenges that Deckers might face moving forward? Do they see any potential roadblocks ahead?
They're aware of the potential for headwinds in the second half of the year, especially with the talk of a more promotional environment across the retail industry.
So more competition and potentially more pressure to lower prices.
That's the challenge, but they seem confident in their ability to find that sweet spot, offering value to their customers without sacrificing their brand integrity or their profitability.
They're playing the long game.
It's about sustainable growth, not quick wins.
Exactly. They also mentioned the potential impact of tariffs, but acknowledge that it's still too early to tell how those might play out, but it's definitely something they're monitoring.
Tariffs are always a wild card. They can really disrupt supply chains and drive up costs, potentially impacting pricing and profitability. But it sounds like Deckers is taking a proactive approach to risk management.
Definitely, they seem prepared to adapt as needed. So, to recap, we've seen HOKA soar past $2 billion in revenue, UGG successfully attracting a new generation of consumers, and Deckers demonstrating a really strategic and balanced business model.
It's really impressive to see how they're not only achieving such strong performance, but also acknowledging potential challenges and staying flexible. Absolutely. It's a testament to their deep understanding of their consumers, their commitment to innovation, and their ability to navigate this ever-changing retail landscape. It's really fascinating to see a company operating at this level.
Definitely. It makes you wonder what's driving this demand for those higher-priced, performance-oriented shoes, especially with HOK's success. Are consumers becoming more discerning?
That's a great observation, and it really speaks to a larger trend we're seeing. There's a growing emphasis on quality, performance, and innovation, especially in categories like athletic footwear. Consumers are savvier than ever before. They're doing their research, reading reviews, and really comparing features before making a purchase.
It's not just about the brand name anymore. It's about the value proposition.
Exactly. Consumers are willing to invest in products that truly deliver on their promises, particularly when it comes to something like athletic footwear, where the right gear can really impact their performance.
It makes sense. If you're serious about running or working out, you're not going to skimp on your shoes. But you mentioned that this trend goes beyond hardcore athletes, right?
Right. It's definitely becoming more widespread. There's a broader awareness of the connection between quality footwear and overall well-being. Even among casual walkers and gym goers, people are recognizing that proper footwear can make a real difference in their daily lives and their overall health.
It's about feeling good and performing at your best, no matter what your fitness level is. How does this tie back to HOK's success?
HOK has been really smart about positioning themselves as a leader in performance and innovation. They're not just following trends, they're setting them, constantly pushing the boundaries of footwear technology.
And they're not afraid to price their products accordingly, knowing that consumers who value those advancements are willing to pay for them.
Exactly, and it's working. Consumers are responding to that commitment to quality. The strong sales of HOK's higher price models really show that people recognize the value and are willing to invest. They've built a loyal customer base who trusts their products and knows they're getting something special.
So HOK has really found the formula for appealing to this more discerning consumer. What does that mean for other brands in the athletic footwear space?
I think it's a wake-up call for the industry. It demonstrates that consumers are craving innovation and quality and are willing to pay a premium for it.
It's a shift towards a more discerning consumer who values substance over hype.
Absolutely. It's not enough to just have a flashy marketing campaign anymore. Brands need to deliver genuine innovation, superior comfort, and a true commitment to quality if they want to stand out.
Speaking of commitment, let's talk about Decker's emphasis on sustainability, which was another highlight of their earnings call.
This is an area where Deckers is making some serious progress. They were recognized by Newsweek as one of America's greenest companies for the third year in a row.
Wow, 3 years running. That's impressive. They're not just talking the talk, they're walking the walk when it comes to sustainability. What specific steps are they taking?
They're taking concrete actions to reduce their environmental impact across their entire operations. They're using recycled materials in their products, minimizing water and energy consumption in their manufacturing processes, and partnering with suppliers who share their commitment to sustainability.
So they're thinking about sustainability throughout their supply chain. But are they just quietly doing these things, or are they being transparent about their efforts?
They're being very open about it, which is crucial in today's world, where consumers want to know that the brands they support are aligned with their values. Deckers is very transparent about their sustainability goals and the progress they're making.
So it's about accountability and transparency as well. How are they incorporating sustainability into their specific brands like HOKA and UGG?
Well, UGG, for instance, is putting a lot of effort into sourcing its sheepskin more sustainably, working with farms that prioritize animal welfare and environmental stewardship.
So they're thinking about the entire life cycle of their product.
Exactly. And HOK has incorporated recycled materials into some of its most popular shoe models. They're using recycled polyester, recycled rubber, and even sugarcane-based foam to reduce their reliance on virgin materials.
It's amazing how they're weaving sustainability into every aspect of their business. It really seems like they understand that sustainability isn't just good for the planet, but also good for business.
They're definitely recognizing that sustainability is becoming increasingly important to consumers, and it's something they can use to differentiate themselves in the market.
It's a smart strategy. So we've got HOK leading the charge in performance footwear, UGG successfully evolving its brand, and Deckers as a whole embracing sustainability. It seems like they're in a really strong position right now. But looking ahead, what are your thoughts on how UGG can maintain its momentum with the younger demographic, especially with all the success they've had with recent collaborations and new product lines?
That's a great question. To maintain that momentum, I think they need to continue to be innovative and fresh in their offerings. They can't solely rely on those classic styles, no matter how iconic they are.
They need to keep pushing the boundaries and experimenting with new ideas.
Exactly. They need to keep those exciting collaborations coming, explore new materials and designs, and maybe even introduce some unexpected silhouettes that capture the attention of younger consumers. And they have to stay on top of evolving trends in fashion and culture.
It's all about adapting and anticipating what's next.
Absolutely. Younger consumers are always on the lookout for the next big thing, and UGG needs to be prepared to evolve with those changing tastes.
And it's not just about the products themselves, right?
Right. They need to continue building a strong emotional connection with their target audience. It's about creating a brand that people feel connected to and identify with.
So tell those compelling stories, create engaging content, and build a sense of community around the brand.
Exactly. It's not just about selling products, it's about creating a brand experience that resonates with the younger generation's values and aspirations.
It sounds like UG has a lot of exciting opportunities ahead of them.
They definitely do. And if they can successfully navigate these challenges and opportunities, I think they'll be in a great position to continue their success with the younger demographic for years to come. But before we wrap up, I want to revisit something Steve Fashing, the CFO, mentioned during the earnings call that I found particularly interesting. He talked about their unique inventory management strategy, the pull model.
Ah, yes. The pull model. It seems to be a key part of their success, ensuring they're not overproducing and ending up with excess inventory. Can you break it down for our listeners who might not be familiar with the term?
Absolutely. Essentially, the pull model is all about producing and distributing products based on actual consumer demand rather than just pushing products out there and hoping they'll sell.
So they're not just flooding the market with product and hoping for the best.
Exactly. They're much more strategic and disciplined in their approach, constantly monitoring sales trends, analyzing data, and adjusting their production plans accordingly.
It's like a delicate dance between supply and demand.
It is, and they're doing a remarkable job of it. This approach has helped them maintain those premium prices, avoid excessive discounting, and keep their brands highly desirable.
And it also protects their brand integrity, right? No one wants to see their favorite brands constantly being marked down.
Exactly. The pull model helps preserve that aura of exclusivity and desirability that surrounds brands like HOKA and UG. It's a really smart approach, especially in such a competitive retail environment.
It's clear that Deckers has a long-term vision and a very disciplined approach to business. So as we wrap up this deep dive into Deckers brands, what are the key takeaways our listeners should remember?
I think one of the biggest takeaways is the power of a balanced approach. Deckers isn't just relying on one brand or one sales channel for its success. They have a diverse portfolio of brands, each with its unique strengths, and they're strategically managing their distribution channels, finding that sweet spot between direct-to-consumer and wholesale.
It's like having a well-diversified investment portfolio,
Yeah.
spreading the risk and maximizing opportunities for growth.
That's a great analogy. Another key takeaway is their willingness to adapt and evolve. They understand that the retail landscape is constantly changing, and they're embracing those changes, experimenting with new technologies, exploring new categories, and always looking for ways to improve.
They're not resting on their laurels. They're constantly innovating and evolving.
Exactly. And they're also deeply committed to operating responsibly, both from an environmental and an ethical perspective. They're building a business that's not just profitable, but sustainable and ethical as well.
They're proving that it's possible to be successful, innovative, and responsible all at the same time.
Absolutely. Deckers Brands is definitely a company worth watching.
Well said. This wraps up our deep dive into Deckers brands. We hope you enjoyed this exploration of a company that's at the top of its game.
And for those of you who want to delve even deeper, we encourage you to explore more about Deckers, HOKA, and UGG. There's a whole world of fascinating insights waiting to be uncovered.
And as always, keep those feet comfy and stylish.
And keep those deep dives going.